Hey everybody, thanks for joining me. Before we get started, please click subscribe to my channel if you don't already. And please take a minute to check out the link you see on your screen for a message from my sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, as I'm doing my research and trying to figure out what stocks I want to buy in June, because I buy my stocks once a month and do a video about them, which is coming up, I'm finding some stocks to add to my watch list, and some are pretty interesting opportunities. One in particular that caught my eye this month is a company called Xenia Hotels and Resorts. Ticker symbol is XHR. Now, this is a real estate investment trust that owns a portfolio of about 32 hotel properties, most of which are operated under various Marriott or Hyatt brand names. You'll find some Westins, some W's, some Marriott brands, some Renaissance, some Hyatt Regency is a major brand of theirs. And the general takeaway is that the portfolio is luxury hotels and what they call upper upscale hotels. So nice hotels. It's about a one-third mix between group business, business travelers, and leisure travel. So a very nice diversified mix. So if, for example, business travel takes a hit, the company wouldn't be too devastated. Same with if leisure travel just took a hit in a recession, it wouldn't be that devastated. So the stock has not done that well lately. It's down about 40% over the past year, mainly on interest rate and economic fears. Interest rates generally put pressure on real estate stocks. They create higher borrowing costs, things like that, and just kind of put pressure on any income focused investment. And with a recession coming, hotels are a cyclical business. They could see occupancy decline in recessions. They could see average room rates decline during recessions as demand falls, things like that. So those are legitimate fears. It's down 40%. It's down for a reason. But I think it could be a nice little comeback candidate. So, for one thing, the luxury hotel market historically has rebounded stronger than the overall hotel industry after recessions. So, group revenue is a particularly interesting business right now. The group market has come roaring back in the wake of the COVID pandemic and could be even more important to the economy going forward as remote work becomes more and more prevalent. When you when you think about it this way, if you see everybody in an office every day, it's not as important to be able to gather in person and collect ideas or talk about your ideas in a different setting. But when you're working from home and don't really get to interact very much, it becomes more of a thing you want to do. There's also a lot of potential to renovate or expand the portfolio, but the general thesis is that this is a great way to play a, a comeback when the economy starts to normalize from the high interest rate and high, recession probability and things like that. So it's a very cheap stock right now. It has a lot of debt. That's kind of the big concern in my mind. Now, it's a good and bad thing. For one thing, the it has about $1.4 billion dollars of debt. Most of it is at fixed interest rates. It has about $280 million dollars of variable rate debt, which would be affected by rising rates. It has no debt maturities until August of 2025, which is pretty impressive for a REIT. I look at a lot of them, and most have at least some coming due in the next year or so. And they have over $700 million dollars of liquidity between cash on the balance sheet and an untapped credit line. The stock right now trades for 8 times its expected funds from operations, which is the real estate version of earnings for 2023. And I think this could be a great way to play the recovery because it seems like most of the bad news from a recession or from interest rates is already priced into the stock at this point. So I think investors would be getting an excellent entry point right here. And it's one that is going to be on my watch list as we head through June. If these low valuations persist, it could become a buy in my portfolio. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.